Okay, so this video is for the second page or the second page of the 1040 form. And the first page we ended at adjusted gross income. So you'll notice that the top of page 2 starts with adjusted gross income where we left off. And then we're going to continue on down. So we have some itemized deductions would be next. Itemized deductions relate to deducting medical payments or medical premiums or medical expenses that you have. Those are subject to a floor. There's also itemized deductions for mortgage interest and property taxes and charitable contributions and DMV fees on your car, which in effect is personal property taxes. So these we'll explore further as we work through the cases, but that would be reported there. Exemptions, everyone is given a standard exemption. Um, so that's the number of people that are on your list of exemptions. So for a single person, there would be one, but married, there'd be two. If there's dependents, it could be three or four. And that times 4,050 is the exemption amount for for 2016. And then we come to taxable income. So when we take our adjusted gross income and subtract itemized deductions and exemptions, that becomes taxable income. Then we can use the tax tables or the tax charts to find out what the tax would be. And then we can look at different types of credits. These credits will reduce the amount of tax that is due. So the tax is based on taxable income, but then down below, we could have a foreign tax credit. If you lived in a foreign country and paid some taxes there, you can deduct every dollar of that. We have credits for child and dependent care expenses. We'll explore that. We have education credits. We will explore that. Retirement savings contributions credit, child tax credit, residential energy credits. These are credits for if you put solar panels on your roof. And then, so we add all those up, we get the total credits, and you can subtract those credits from your tax to reduce the amount of taxes. So a credit is better than a deduction because a credit is 100% a reduction of your tax based on the credit that you earned. Then there are some other taxes that we may need to deal with, like self-employment tax. So self-employment tax, we saw the deduction for 50% of that, but we still have to pay the tax. This is for basically for Social Security for people who are self-employed. Unreported Social Security Medicare tax, that's an unusual item. There's additional taxes on IRAs. Again, very specialized rules there. Household employment taxes, this is if you hire a housekeeper or a nanny or something like that and deduct employment taxes from them. You can report them here. There's a first-time home buyer. There's health care taxes. And so these are additional taxes that you would have. And then ultimately, we come to line 63, which is what the total amount of tax that you are responsible for. Then from that, we can deduct all the things that we've paid in. So we may have paid in on a W-2 form through an employer. Employers are required to withhold money for federal taxes and do. We can also make some estimated taxes. Quarterly estimated taxes are for people that are self-employed and have no other way of getting the money to the IRS. The earned income credit is a credit for lower income people that can take another type of credit and then reduce their tax amount. So there's some additional, there's combat pay election taxes credits, additional child tax credits, opportunity credit, and excess Social Security. That's a kind of an unusual thing. And then there's credit for tax on fuels. These are some really specialized things that we probably won't get into in this class, but these are available and they're on the form. So when we take the total tax, line 63, and subtract the total payments, if the payments are in excess of the tax, then we would get a refund. If the payments are less than the tax, then we'd have an amount due. And the IRS allows you to just pay directly from your bank account or receive the refund directly to your bank account. Or alternatively, you could apply some of your estimated taxes. If you overpaid and didn't want to get paid for it right away, you could apply it to next year, 2017. And then if you still owe at that point, it would show up on line 78. Now, one of the things that you always have to do is sign the tax return, and you're signing under penalties of perjury that this is a lot of this information being reported is on the honor system. And so they want to make sure that you're signing it to know that you believe that this is a fair representation of what happened. You put in the date, your occupation, and a phone number. So that concludes our kind of walk through the 1040. Hopefully that gives you a little more information about how the form works and makes it less of a scary proposition. So thank you for listening, and we'll see you next time.